The biggest IPO in human history, a full analysis of SpaceX's Nasdaq listing. Part 1, SpaceX Introduction and IPO Details. Company Profile. Founded by Elon Musk in 2002, SpaceX went from the brink of bankruptcy after 3 failed launches to becoming the world's most valuable privately held tech giant. IPO timeline. Filed on May 20, 2026, and will list on Nasdaq on June 12, 2026. Ticker symbol, SPCX. Fundraising scale, $75 billion to $80 billion, the largest IPO in human history. Retail quota, 30%, far exceeding the typical 5% to 10%, making it the most retail-friendly mega IPO ever. Part 2, Valuation. Target valuation, $1.75 trillion to $2 trillion. Comparative benchmark, surpasses Meta, $1.5 trillion, and approaches Amazon, $2.2 trillion. Price-to-sales ratio, 93 to 107 times, based on 2025 revenue of $18.674 billion, while still operating at a loss. Market logic. Investors are not buying today's financials but 3 things: the cash flow certainty of Starlink, the option value of space AI, the ultimate narrative of Mars colonization. Investment world definition. This is being called civilization option pricing. Part 3, Equity structure. Musk's singular control. Equity model. Dual class share structure, Class A and Class B. Class A common stock, 1 vote per share offered to public investors. Class B common stock, 10 votes per share held exclusively by Musk and a few core insiders. Control. Musk holds 42.5% of the equity but controls 85% of the total voting power. He will retain over 50% voting power post-IPO. The 4 Musk firewalls, super voting rights, can unilaterally elect 51% of the board members. Controlled company status, exempt from several regulatory requirements, such as having a majority of independent directors. Mandatory arbitration. Shareholders waive their right to class action lawsuits. Related party transaction exemption. Musk can freely allocate resources among his companies. Core conclusion. Investing in SpaceX is investing in Elon Musk himself. Part 4, Core business segments. Starlink, connectivity, the cash cow. 2025 revenue, $11.4 billion, accounting for 61% of total company revenue. Global subscribers, 10.3 million, operating approximately 9,600 low Earth orbit satellites. EBITDA margin, 63%, crushing traditional telecom giants. Rocket launch, space, the technological showcase. Falcon 9 gross margin, 79%, with per-launch costs reduced by 68% compared to traditional methods. Since 2023, it has accounted for over 80% of the world's total orbital mass launched annually. Starship V3 is in its test flight phase, targeting a launch cost of $100 to $200 per kilogram. AI and orbital data centers, the biggest source of imagination, has merged with xAI and plans to build orbital data centers, leveraging the cold vacuum of space to cool AI servers. Has filed with the FCC to launch up to 1 million solar-powered satellites as a low Earth orbit AI computing infrastructure. Signed a computing power lease contract with Anthropic for $1.25 billion per month, running until May 2029. Part 5, Company Development Milestones. Key timeline, 2002, Musk found SpaceX with the goal of reducing space transportation costs. 2008, the 4th launch of Falcon 1 succeeds, securing a $1.6 billion contract from NASA and saving the company from bankruptcy. 2012, Dragon becomes the first private spacecraft to dock with the International Space Station. 2015, first successful vertical landing of a rocket, ushering in the era of reusable rockets. 2020, first crewed mission, sending NASA astronauts to space. 2023, Starship's first orbital test flight. SpaceX accounts for over 80% of global orbital mass launched. 2025, Starlink users surpass 10 million. Revenue from Starlink exceeds launch revenue for the first time. 2026, formally files for IPO, targeting a $2 trillion valuation. Financial reality. Starlink pays the bills, rockets maintain the prestige, and AI burns cash to bet on the future. Capital expenditure in 2025 was a staggering $20.7 billion, with the AI segment alone accounting for $12.7 billion. Part 6. Musk's Astronomical Incentive Plan. SpaceX's S-1 filing reveals two performance-based incentive plans for Musk, arguably the most audacious compensation schemes in corporate history. Plan 1, Space Data Center Incentive, approved April 2026. Trigger conditions: the company's market cap rises from its current $1.1 trillion to $6.6 trillion, and it completes the construction of a space-based data center providing 100 terawatts of annual computing power for AI developers. Reward: 60 million additional shares, vesting in tranches as the market cap increases by every $500 billion. Difficulty note: 100 terawatts of annual computing power is orders of magnitude higher than the current peak power consumption of the entire United States. The filing acknowledges the plan is in an early stage and faces significant technical complexity and unproven technology. Plan 2, Mars Colonization Incentive, approved January 2026. Trigger conditions: the company's market cap reaches $7.5 trillion, and it establishes a permanent human colony on Mars with a population of at least 1 million. Reward: 1 billion shares of supervoting restricted stock. Additional conditions: must simultaneously meet 15 equally spaced market cap milestones, and Musk must remain employed until the goals are achieved. Common features of both plans: both are Class B supervoting restricted shares, granting 10 votes per share. If the company fails to meet the goals, Musk receives 0 shares. No specific deadline is set, only that he remains continuously employed. Since 2019, Musk's nominal annual salary from SpaceX has been just $54,080. Part 7. Risks and Challenges. However, this historic IPO is not without its shadows. The S-1 filing explicitly lists several risks. Technical risk: Starship V3 is not yet fully successful, its 12th test flight is imminent, but many of the previous 11 ended in explosions. Key technologies like orbital data centers and in-orbit refueling are still in the validation phase. Financial risk: the company reported a net loss of $4.9 billion in 2025 and another $4.3 billion loss in Q1 2026. The filing states, "We have a history of net losses and may not achieve profitability in the future." Governance risk: Musk holds 85% of the voting power, leaving shareholders with virtually no checks and balances. The company's charter stipulates that removing Musk as CEO requires a majority vote of the Class B shareholders, i.e. himself. Competition risk: rivals like Blue Origin, ULA, and Rocket Lab are accelerating their efforts. Geopolitical risk: intensifying US-China space competition, coupled with increasing policy uncertainty around export controls and spectrum allocation. Part 8. Impact on the global commercial space industry. SpaceX's listing represents a seismic shift for the global commercial space industry, establishing a valuation anchor. For a long time, commercial space companies lacked public market benchmarks, leading to vague valuation systems. After SpaceX lists, investors can use comparative metrics like price-to-sales ratio, gross margin, and user growth to value other companies. Activating the investment ecosystem, early investors like Founders Fund, Fidelity, and Google will see substantial returns, creating a virtuous cycle of invest-exit-reinvest, encouraging more long-term capital to enter this high-investment, long-cycle sector. Accelerating industry commercialization. Catalyzed by SpaceX, the capitalization process for companies like Rocket Lab and AST SpaceMobile in the North American market is visibly speeding up. Reshaping industry pricing logic. SpaceX has driven launch costs from tens of thousands of dollars per kilogram down to a few thousand. With Starship's maturation, costs could fall to $100 to $200 per kilogram. This cost revolution will force the global space industry to reprice itself. Part 9. How investors can participate. For ordinary investors, there are two main ways to participate in the SpaceX IPO. Method 1. Direct IPO subscription. Participate in the IPO subscription through a brokerage that offers Nasdaq trading. With a 30% quota reserved for retail investors, the subscription threshold is relatively low. However, be aware that the IPO price could be high and first-day volatility could be significant. Method 2. Secondary market purchase. Buy shares directly on Nasdaq under the ticker SPCX after the listing. However, note that the $1.75 trillion valuation already prices in a great deal of optimistic expectations, and a post-listing correction is possible.
Conclusion: SpaceX's IPO is not just the coming-of-age ceremony for the commercial space industry. It is the starting point for humanity's journey to becoming a multiplanetary species. Whether you are betting on Starlink's cash flow, the future of space AI, or the dream of Mars colonization, this $1.75 trillion ticket buys into a grander narrative. As Musk himself said, "I want to die on Mars. Just not on impact." See you on Nasdaq, June 12. Data source: SpaceX S-1 filing, filed May 20, 2026. Date of production: May 21, 2026.